Welcome to the Spokane and Coeur d'Alene area housing market update. It's May 2023. My name is Phil Wells. I'm a real estate agent that takes the time to keep up to date with the market, and I want you to be as informed as possible too. As the market continues to shift, it's important to know which direction we're actually heading in now. So, as always, let's take a deep dive into the data and figure out what's been happening nationally as well as locally. This information is critical because, to be frank, no one knows what's happening with the market right now. Pundits are claiming it's going to go in one direction, other pundits are claiming it's going to go in another direction. What you can do to make yourself stand out if you're a buyer or a seller in the next couple of months is to understand what's happening right now in the here and now, and that's what we're going to do. So let's get into it. Let's start by getting a national picture of what's been happening. We'll look first at national pending home sales to do this. Contract signings were down in March 5.2% from last month. This breaks with the upward trend we were seeing of 3 consecutive months of month-over-month gains recently. Year-over-year contract signings declined 23.2%, which represents 22 consecutive months of year-over-year sales declines. Mortgage rates in March 2022, this time last year, were in the 4% range, creeping up towards the 5% range, but there was still a ton of momentum in the market back then, so these year-over-year sales declines can be readily explained. In the West, where I'm based, sales decreased 8% month-on-month and declined 32.2% year-over-year. One thing I've noticed about the West's figures is that they're always more exaggerated than the rest of the country. It must be because we have higher prices out here. Here's what the National Association of Realtors chief economist has to say about March's pending home sales. The lack of housing inventory is a major constraint to rising sales. Multiple offers are still occurring on about a third of all listings, and 28% of homes are selling above list. Limited housing supply is simply not meeting national demand. Sales in the second half of the year should be notably better than the first half as job gains continue and more favorable mortgage rates are expected. Sales of new homes are already matching 2019 pre-COVID activity levels and are expected to increase in 2023, largely due to plentiful inventory in this segment of the market. If you're a buyer, know this, there is low inventory as the economist previously just mentioned, so expect those newly listed, objectively desirable homes to go quickly and probably to go above list price. However, if there is a home that you've got your eye on that's been languishing on the market for a little while, there is the type of property you might be able to pick up concessions on and maybe get it below list price too. I have encountered several multiple offer situations this past month and have had to reach into my bag of tricks from 2020 and 2021 to get homes under contract. I still maintain though that you have the best market conditions right now as a buyer to actually get the property you want under contract the first, maybe the second time. And when you are finally able to refinance in the future, you'll be able to pair what is a good purchase price right now with a good mortgage rate in the future. And while home prices are increasing, there is still a window of opportunity there for you. But be aware, home prices are rising. Nationally, they're only 1.7% away from their highs. The chief economist at Fannie Mae is quoted as saying, "The fact that prices rose slightly in the first quarter is evidence of significant pent-up mortgage demand despite ongoing affordability constraints." So yes, while rates are high, ask yourself this question. Would you rather be refinancing when rates come back down or scrambling around trying to buy a home? Let's move on and look at mortgage rates. Obviously, the majority of people buying homes are doing so with the aid of a mortgage, so to keep an eye on mortgage rates gives us a really good idea of what direction buyer demand is heading in. Sticking with March for a second, so we can really analyze that period in time. Mortgage rates at the start of March were at 6.94%, and by the end of March they were at 6.57%. The most recent rates that I could see have slowly receded to 6.49%. I think buyer competition is coming back. However, I really don't foresee prices rising too much too fast because mortgage rates are too high, people's monthly payments are too high. You just can't bid homes up that much. People can't afford it. So until such time as mortgage rates come back down, I think you still have a good opportunity there to purchase a home. Sticking with mortgages for a second and looking at mortgage application rates. Obviously, this is a huge leading indicator for the overall housing market. After all, it doesn't matter if rates are at 1% or 10%. It matters how many people are actually applying for loans. Mortgage application rates actually increased every single week in March, which is the first time for a while that I've seen consecutive gains throughout a month in terms of mortgage application rates. This either tells me that softening mortgage rates is having a positive impact on buyer demand, or we're just seeing some seasonality return in terms of the spring selling season. Or it could be a combination of both of those things. Just in terms of context, we have been hovering around 30-year lows when it comes to mortgage application rates, so it should really only be uphill from here. So that's what's been happening nationally. Let's look now a little bit more locally and look at the Spokane market. I think it's important to really round out that national picture before looking at the local market, because Spokane isn't an economic island. We need to know that Spokane is acting the same way as the rest of the nation, and if it's not, we need to understand why. These are actual sales from April, so please be mindful that we are comparing locally closed sales in April with national pending home sales in March. It does take about 30 days to actually close a transaction, so I'd say it was a fairly accurate comparison, but it's not perfect, just keep that in mind. Sales were down 32% year over year, which is more pronounced than the national year over year decrease of 23.2%, but Spokane is performing about the same as the overall Western region's year over year decrease of 32.2%. Median home prices are down 2.4% on a year over year basis to $415,000. Which is the 5th month in a row of year-over-year price declines here in Spokane. It's worth noting, though, that this isn't the whole picture, because prices are actually rising on a month-on-month basis. Last month, they were at $400,000, and the month before that, they were at $375,000. So we're up $40,000 here in terms of the median price point in Spokane in 2 months. Inventory is up to a 1.6 month supply. That's still very low. That means that if no homes were listed for the next month, we'd essentially be out of homes to sell here in the Spokane area. That's not how an economy should run. We definitely need more supply, as the National Association of Realtors chief economist alluded to when we were looking at pending home sales. That low inventory, I believe, is what's causing a spike in demand and a surge in prices that we're seeing. New listings are down 12.9% on a year-over-year basis, which isn't great and isn't what I would expect to see. I would expect to see more listings as we pick up and head into the spring selling season. I think this shows then that Spokane isn't behaving differently to the rest of the nation, and we can expect those macroeconomic news articles and news stories to impact Spokane just the same as it would impact anywhere else in the country. Looking now at Coeur d'Alene area sales. For those of you that don't know, I am licensed in Idaho, and I wanted to start including those sales in this market update video. Again, these are actual sales for April in Kootenai County, so please be mindful. This is a good comparison to national figures, but not a perfect comparison. Cumulative sales for the year were down 28.9% year over year. Median home prices were down 6.4% on a year over year basis to $515,000. But just as in Spokane, they are up on a month-on-month basis. Last month, they were $501,000, so there is a definite increase happening there as the spring selling season happens. Inventory is sat at 790 units throughout Kootenai County for April 2023, which is up from the 300 units that were available this time last year. So we are seeing a bit of an inventory glut there, a little bit of a surplus in Kootenai County. Days on market in the Coeur d'Alene area is up pretty substantially to 98 days on market. Honestly, the market conditions sound ideal if you were sidelined last year or even the year before by the frenzied market we were seeing and still want to get into this market. This means then that overall the Coeur d'Alene area is behaving a lot like the rest of the nation, with the exception of maybe inventory. Maybe that inventory could be explained by a lot of people moving here in just the last couple of years and finding out that the winters here are actually pretty rough. Now I wanted to touch on a few news articles that have stood out to me this month. We're going to just take a brief look at all these stories because there is a lot going on. If you want to read the articles in their entirety, as always in the description to this video, There will be links to all the sources that I use. We had another bank failure this month. We saw First Republic Bank fail after it lost $102 billion in deposits. The best parts of that bank were sold to JP Morgan Chase, while the most toxic parts of the bank's holdings went to the federal government. But don't worry, banks aren't being bailed out, we're told. If you're interested in why this keeps happening, it has a lot to do with these high interest rates wreaking havoc on banks' balance sheets. Here's an article to read more about this if you're interested. In terms of inflation, we saw a really healthy drop in the rate of inflation here, with March's inflation rate being 5%. In terms of the Federal Reserve and the Fed funds rate, the Federal Reserve upped its funds rate, but gave the strongest signal yet that it's done with rate hikes. That doesn't necessarily mean that the rates are going to drop right away, but it does seem like it's downhill from here. The only question is when and how quickly. Remember, inflation is still high. 5% is better than 10%, but I suspect we're going to see inflation in the 2% range before we see rates fall substantially. A piece of news that really took people by surprise this month was the Biden administration's new rules relating to prime and subprime borrowers. You'll have no doubt seen this screenshot floating around from Fox News, but let's take a closer look at this policy because it's important. If you have a score of 640 to 659 and borrow 75% to 80% of the home's value, in other words, you make a 20% or 25% down payment, you now pay a fee equal to 2.25% of the loan. Before these changes, the same borrower paid a 3% fee. A borrower with a higher credit score of 740 to 759 would have paid a fee of 0.5% on a loan with an 80% loan to value. Under the new rules, that fee rises to 0.875% on a $350,000 loan. That's an extra cost of $1,313. On top of this, with home affordability at record lows, the policy is not only morally flawed, but is also terrible in terms of timing. In my opinion, this policy creates a seriously perverse incentive structure. If you pay your bills on time, keep your credit utilization low, and do that for long enough, you will have good credit. There's no secret about it. I came to this country in 2018 and had to start my credit journey from scratch. So I did exactly as I suggested. I paid my bills on time, I did that for a decent amount of time, and now I can obtain the loans, the credit cards, and the mortgages that I want to obtain. But for some reason now, the current administration has decided to erode the importance of making those good, sound financial decisions. Now let's try and piece all this information together and summarize the market as we see it right now in May 2023. The big news is that the Federal Reserve has signaled it's pivoting away from further rate increases, but unfortunately 5% inflation is still too high, so don't expect the Fed funds rate to drop quickly anytime soon. Nationally, the most recent report for pending home sales shows us that sales are down. In terms of mortgage rates are beginning to soften slightly, but they're still high. They're currently sat at 6.5%. Home prices nationally showed a modest gain for the first quarter of 2023, and that report revealed that we're pretty close to all-time highs when it comes to median home prices. In terms of Spokane specifically, just like the rest of the nation, home sales are down and we continue to have low inventory, and prices are on the way up. They're up pretty substantially on a month-over-month basis here, with $40,000 in terms of increases just in the last 2 months. Likewise, in Coeur d'Alene, sales are down, prices are beginning to creep up on a month-on-month basis, but unlike Spokane, there is a large glut of inventory over there right now, and days on market are creeping up quite substantially too. If you're a seller, know that buyer demand is heating up. If your home is objectively desirable and it's well prepped for market, you can expect first weekend offers. Some of those offers will likely be over list price. However, if your home succumbs to the days on market trap, you will find yourself receiving below list price offers and offers requesting certain concessions too. But overall, it is good news for sellers. You can actually sell your home once more, which comes as welcome news to those that were quite literally trapped in their home, unable to sell just 6 months ago. If you're a buyer and you're just seeking out those new listings, you will find yourself up against some stiff competition. But if you're prepared to look for those homes that have been on the market a little while, or have come back on market after a contract failed, you could find yourself scooping up some really good bargains right now. But I think one thing is plain, we are definitely not in a buyer's market anymore. What happens though if you're not in the market immediately to buy or sell your home? If you're a seller, have a wander around the property. I'll be happy to come and walk it with you. Fix those little things that are going to put buyers off. Now is a great time to be doing that. If you're a buyer, think about how you can best maximize your savings for those down payments. Look at those high interest rate savings account. Make sure you're making your money work for you as you save up to buy a home. And regardless of what you might have heard, don't deliberately lower your credit score. You will still pay less overall if you have a good credit. That's it for this video. I hope it was helpful. If it was, please like and subscribe. That actually does help me out. And if you're looking at buying or selling in the immediate term, or you want some advice for maybe buying in a couple of months, maybe 6 months, please reach out to me, give me a call, shoot me a text, send me an email, or find me on Facebook or Instagram and contact me there. Until the next one, my name is Phil Wells, and thank you for watching.